completely consumed by his own ego. He's a greedy, selfish, very, very bullying man. I don't like him at all. That's no secret. It's like he just loves chaos. He has some direction he's going, but I find it a very narrow one, a very negative one, and not very good for the world, and not very good for America. And tariffs fit into that. To be honest, I don't know whether he's serious about tariffs or not serious. He calls the desire to make Canada 51st state. He just loves to throw bombs. I don't know where he's going. I don't know what's going to happen. I can't tell you the future any more than anybody. There's going to be a lot of chaos and a lot of unintended consequences of his actions. A lot of unintended consequences. And I don't know what they're going to be, but I can tell you one thing. Most of them will be good for gold.
Hello, everyone, and welcome to another edition of CEO and Market Expert Interviews. I'm your host, Lucian. Most of you know me as Triangle Investor from social medias. We are joined today by a familiar name in mining. He's a geologist and resource company entrepreneur with almost 50 years of experience in the national minerals and renewable energy industries. Founder and chairman of American Silver Corp, one of the world's largest silver producers, Equinox Gold, and much, much more. Mr. Ross Beaty, welcome to my show, sir.
Thank you very much for having me on.
The pleasure is all mine, and I look forward to this chat. We can go first in the past. I mean, in the past, like I said, you have 50 years of experience, but I wanted to know, when did you actually decided to enter the precious metals world? When was that? What attracted you to it? And if you can draw some parallels between now and then in the terms of market fundamentals and dynamics.
Sure. I'm going to try to make this short because I could make it very, very long. My very first public company was Equinox Resources, which was a Vancouver stock exchange company. I began in 1985 when I knew almost nothing. I was a very good geologist, but I had no idea how to run a public company. I had no idea how to even read a balance sheet. I had no financial background. So it was a lot of mistakes. Just you call this the school of hard knocks, or you learn by making mistakes. And one thing I can do is I can learn from my mistakes very quickly, and so I quickly pivot. But I made all kinds of stupid things. So in that first company, I can't tell you what there was no real central light, like let's build a silver company, or let's build a gold company, or let's build a copper company. I just tried to do all kinds of things that I kind of thought would one would make 1.2 and 1.2 would make 1.5, 1 point, and so on. And I was just everywhere. You won't believe it, but I even had lithium properties in 1985. In fact, the second largest lithium pegmatite deposits in Canada. I was sure lithium was going to be a good battery metal, and I was way ahead of the game. I had a joint venture looking for lithium brines with Teck in 1983, believe it or not. In 1986 and 87, I looked for gallium and germanium. I spent 4 years looking for platinum and palladium. I had projects all around Canada, in West Africa, Sierra Leone, and Liberia, Nevada. I was everywhere. And finally, all of this resulted in discovery of a gold mine in Nevada. We discovered it in a very simple way. We hiked across the mountains there, and we discovered a little outcrop. It had some gold in it. We staked some claims, and lo and behold, after many years, a gold deposit was found, and eventually I sold the whole company to another company that wanted that gold deposit. But in the meantime, I had bought a small gold mine in Nevada that we were partners with Cominco in. I opened a zinc mine in Washington. It was a disaster. I bought a gold company that had a producing mine called Eastmac from Lundin, from the Lundin family. That never really turned into anything, but finally we found this gold mine, and bang, that was the first big win for me. And the company was sold, and I learned after 9 years or 10 years in that business, I learned a lot about what not to do. I mean, I really was like a shotgun. So many little pellets trying to find the bird that would make you dinner, and it was complicated, but we got lucky and we made this discovery, and I learned so much. One of the things I learned is to focus, is to have a strategy, to focus on it, and that has worked out quite well for me. But in terms of gold, to answer your question, I mean, there was nothing magic about gold when I started. I didn't really know anything about gold or anything. But I found that gold is quite an easy thing to build a small company around. Number one, there are many gold deposits in the world. Gold is everywhere.
Yeah.
Number two, there are many small gold deposits that a small company can acquire and build on. Number three, it's very easy to finance gold because it's money. So you can do gold loans, you can do forward purchases. A lot of people want to invest in gold companies because they think the gold price will go up a lot. It's pure, it's clean. And then as a metal, gold is really magical. I mean, gold, to be honest, I built a big silver company. I love silver, but I love gold even more. There's something magical about gold. I'm taking my gold, my wedding ring here, and sometimes I just feel it. Gold is very special. It's kind of got magic to it. It's heavy. It's very, very heavy. It's warm to the touch because it's a very good conductor of electricity and heat. It's soft. It doesn't change. It doesn't weather. It doesn't oxidize. It doesn't become something else like copper or silver does if you leave it in the air for a while. It stays like it's formed forever. And so there's some magic to gold that kind of gets me, inside, and it feels really good to be building a gold company. Uh, After many, many years in the industry, I've gone from my first company, Equinox, which was kind of everything, became gold, and then I started silver to focus on building the biggest silver company in the world because I knew it was a rare thing. I knew all about silver. It mostly produced as a byproduct from other like lead or zinc or copper or gold mines. It's very hard to find clean, pure silver mines. So it was rare. And if you focus on something, you can actually, if you work hard, you can achieve your mission usually, and that's what we did. And then after many, many other exploration companies in my career, my last company is Equinox Gold. And this time we focus on gold because it's something I love and it's relatively easy to build a big company in this metal. There's so many other companies that you can combine with to form bigger and bigger companies. And the metal is beautiful. It's got a great future. It's done very, very well. So that's really a very long answer to your simple question.
I really like the answer, especially the lithium part in 1983. I really enjoyed hearing
Yeah.
that. That's very impressive background. Actually, I knew a part of your background, but I learned something new over here. Thank you for that. Let's move to the current topics. Maybe we should start with Trump and tariffs. Do you see Trump tariffs hurting the industry and the companies that you are involved with?
You know, there again, I can give you a quick answer or a very long answer. I'll choose the quick one.
Sure.
Trump he's completely consumed by his own ego. He's a greedy, selfish, very, very bullying man. I don't like him at all. That's no secret. It's like he just loves chaos. He has some direction he's going, but I find it a very narrow one, a very negative one, and not very good for the world, and not very good for America. And tariffs fit into that. To be honest, I don't know whether he's serious about tariffs or not serious. He calls the desire to make Canada 51st state. He just loves to throw bombs. I don't know where he's going. I don't know what's going to happen. I can't tell you the future any more than anybody. There's going to be a lot of chaos and a lot of unintended consequences of his actions. A lot of unintended consequences, and I don't know what they're going to be. But I can tell you one thing, most of them will be good for gold. And that's all that's all I can really say. I think it should make a very good case for gold today, even better under Trump's presidency. How it unfolds, I can't tell you. I just can't tell you. He's such a master of chaos. And some of the things, actually, they're not so stupid trying to make the US government more efficient. That's a smart thing to do. Everybody should try to do that. And there's a lot of room for improvement. I think he would be very well directed to focus on the US military. There's probably the most waste and inefficiency right there. But moving along to other things, I think what Musk is doing is, some excess, of course, but at the end of the day, maybe the American government will be more efficient, and that's a good thing. Immigration is a big thing for Trump. Maybe it'll help, maybe it won't. I don't know where it's going to go, but it's certainly going to cause a lot of disruption, and that's going to be good for gold.
Yeah, agreed. Gold usually per performs very well in chaos times, and like you said, this could be a good trigger for gold. But beside the tariffs, what are some important trends on the precious metals market that investors should pay attention to?
I think in the macro picture, gold in the last 2 years, since the Putin invasion of Ukraine, has completely changed its traditional performance against certain things. So traditionally, it has been more or less inversely correlated to the US dollar. As the dollar weakens, gold goes up. Similar with treasury yields. As yields get higher, gold tends to go lower, and vice versa. Real yields, again, inflation-adjusted yields are very important for gold because gold has no yield itself. But in the last couple of years, everything's turned on its ear. U.S. dollar has got stronger. Gold has had this amazing run. Yields have not come down anymore. In fact, they've gone up last year. Gold has still gone up. So gold is behaving completely differently than it's behaved for the last 70 years. Uh, and this is, you could analyze it quite clearly as a response mostly of Asia, not entirely, but mostly of Asia, to wishing to get off of the US dollar as a form of treasury asset and moving to gold. By far, the largest new demand in the last couple of years has come from central banks, led by China,
Yeah.
but not only China. A dozen other banks are increasing their portion of gold in their treasury holdings. So that's a powerful force, independent of the strength of the dollar, really a desire to move away from the dollar so it can't be used like it has been with Russia. It can't be used as a sort of a weapon of war. And and that's fairly profound, and I think that will continue for some time. Most Asian countries are less weighted in gold than they should be, or they are traditionally in the West. And so I see this continuing quite significantly. Then the other side of the coin is Asian retail demand, because that was also a big force last year, significantly higher demand for gold in Asian retail areas, India, China, Vietnam, Indonesia, many places. Uh, why that is, I think you could say it's different for each country, but that's the result that we've seen, and it's been very good for gold, regardless of the dollar, regardless of true yields. So these are kind of new forces, you could say, but they're powerful, they're long lasting. I don't see why they would change anytime soon. In fact, they may not change for a very long time. And these are going to be powerful forces that will drive gold prices higher. That's one thing that is kind of new and different. But the thing that's always forgotten by economists and people who are talking about gold in terms of, commentators, one thing that's forgotten is gold supply. Because supply, of course, the price of gold is set, the price of anything is set at the intersection of gold, of supply and demand. Demand goes up, supply goes up, the price doesn't change. Demand goes up, supply stays steady, the price goes up. And that's what's happened with gold. You've had increased demand, usually that brings more supply, and maybe it will in 5 or 10 years. But we haven't seen significant new total gold supply from recycling of old gold and new mine discoveries and mine supply for nearly 12 years. The actual gold supply hasn't gone up much, a few percent, but it's been almost flat. So that's very bullish for the future, very bullish for the price of gold. Uh, then there's other odd things in this market. Even though you've had this incredible run in gold, it's been one of the most significant gold moves in my career the last couple of years. You haven't had a move of money into the gold equities. And
Yeah,
that's a
that's my
strange
next
thing. And
question.
maybe,
The disconnect between the commodity and the equities. Do you believe that era ends now, soon, or has already ended?
yeah, no, I don't believe that at all. It's something, again, very different, and it's sort of worrisome in some ways. Maybe it will change, but I can't say that I know how to predict this. It's a funny thing. To give background, for 70 years in my career, looking back to after the Second World War, the gold price and the price of gold equities tends to move in sync, right? They're cyclical,
Yeah,
but they go up and down together. The last few years, gold prices have gone up and gold equities have been flat. The most profound year was last year when you had this great run in gold. Gold
yeah,
equities are flat, and some gold companies like the big guys like Barrick and Newmont actually went down.
yeah,
The juniors
yeah,
didn't move at all. The mid caps, some of them moved depending on what company. Agnico Eagle was a good performer. Alamos was a good performer. There's some windows in that general flat performance that were good, but uh, what's happening in the equity space is very different than what's happening in the demand side. Demand side are new players that are not Wall Street players. They're, the Asian central banks, they're Asian retail buyers. In the equities, you have typically, North American and European money that goes into the space where they're looking for value investing. You have institutions that are specialized in mining that are smart. They go in and they go out. Those institutions are really beat up right now. There's the force of passive investment. Passive investment meaning if you have, let's say, 10 companies right now in, say, gold mining, it could be
mhm,
any sector really. This is a problem in all sectors. Uh, if there's a move in the value of, if there's a move because of momentum, because of liquidity, because of a news release that might be sounding negative with computer algorithms looking at that news release, you have a movement of money in and out. It doesn't actually have anything to do with fundamentals of those companies. So I don't know what percentage of investing right now is passive money. This means ETF money. This means algorithmic investing based on things that don't have anything to do with the value of the company or the individual company. But it's a very large portion of today's investment. The specialist funds are wiped out. There's very little specialist money in there like there used to be. And the generalist investors simply are not buying gold. They're buying the big seven, they're buying healthcare, whatever they want to buy, they're not buying the golds. For one reason or another, their generalists are just not there. So, what will cause that to change? I think the passive investment movement, which has just got stronger and stronger and stronger, it's there to stay. So what then will bring the generalist investor into the space? Because very little gold is held by most North American investors. Europeans probably own more gold than North Americans as a
yeah,
rule.
traditionally.
What will bring it back in? I'm not sure. Normally there's a catalyst, and I really thought a year ago the catalyst would be a big move in the gold price. A gold going through 2,200 or 2,500, something like that would bring a flood of money into the space. It's brought some in. Most companies, gold went up 27% last year. Most, an average of these gold companies probably went up the same. Some didn't go up at all, like Barrick and Newmont, and others went up, 50%, 60%. But normally, if gold moves up 10%, the equities go up 20%. That's the leverage you got buying the mining companies. That's why I built Equinox Gold as a big company, purely to get that leverage. A movement of 10% in the gold price, the gold stock goes up 20 or 30%. That's just been normal in my career. And that's broken down. Uh, is the move of generous money into gold stocks going to be at some gold price? Maybe if gold goes through $3,000, maybe it's happening right now. This year's been pretty good for most gold companies. Maybe it's happening right now. Maybe it's going to come when there's some big takeouts. Maybe it's going to come from a bunch of really great exploration results that will drive the value of the juniors. But so far, even a company like my Lumina Gold. I mean, I've got this junior company that's been working for 12 years, I think, in Ecuador. It's got this really great deposit. Uh, it was trading around where it's trading right now 2 years ago when gold was $1,800 an ounce. Gold's 2,800 today. Stock hasn't moved. It's got 23 million ounces of gold in resources. It's doing a feasibility study, so it's highly de-risked. It's going to produce, I don't know, 300,000 ounces a year for more than 20 years at an all-in cost of around $800 or $700 an ounce. Those are big numbers. The net present value of that project at today's gold price is about $6 billion. The stock's trading for 150 million US. I mean, that's the kind of
That's a big
disconnect you see today.
disconnect.
It's irrational. It normally won't last. We could wake up tomorrow and the market might say, "Oh, that's the perfect kind of company for me to do a speculation on. It's well managed. It's got access to capital. It has a great project. Bang, the stock will double overnight." That's the kind of thing I've been waiting for, but so far it's been very frustrating to see. And that story can be repeated 100 times.
Of
I can
course.
tell you 100 other companies that are in the same boat.
Yeah,
That's how
all
it
good
is.
points. Yeah, yeah. Ross, we are actually in the 15 years bull market, except for the brief COVID crash. Are you
We are.
afraid of the bigger market correction or even a meltdown where all asset classes, including gold, could go much lower?
Yeah, so there's two concerns there. One is that you have, for some reason, the end of the gold cycle, right? Gold goes down and it'll pull all gold equities with it across the board. That's one. And the second is a broad market meltdown. The S&P is way overvalued. It's going to collapse by 40%. And for sure, 100%, those are, I would say, high probability outcomes, the last. Uh, in the first case, what will cause gold to go down right now and pull the gold equities down? Yes, it's possible. It has been a long bull run for sure since probably 19 gold kind of broke out from $300, 250, 300, 350 around 1990, whenever it was. I can't remember now. 1990, 2000, right around then.
Yeah, yeah,
2001. So it's been
yeah.
20. It's actually been over 20 years. Yeah, 2002, I think, is the big breakout. Uh, And normally markets don't have bull cycles that long. So it is long for sure. But why will it change? I mean, those fundamentals I talked about are still very solid. And I don't see that happening. Could happen. I doubt it will happen. You have to bet on these things. And you never, what did what did Yogi Berra say? Yogi Berra said, "It's tough making predictions, especially about the future." And he was right. you know,
Yeah,
it's hard to make predictions, but because you can never be sure. Anybody who says this is what's going to happen is an idiot. So I can only say probably, or I hope, or it seems to me, but it's not worth a lot.
yeah.
So that's gold. Now you look at the general market. Oh, the general market is way overvalued. It's way overvalued. Look what happened to Nvidia, last Monday, a week ago. Uh, this $600 billion correction. It's you have to just laugh at that because it's more than that's something like, I think it's like 4 or 6 times the value of the entire gold industry, and it's 3 times the value of the entire mining industry in one day.
That's
So
not normal.
the world is kind of in a bit of a crazy state in those big companies, in the tech companies and these so-called market darlings. And that could correct overnight. But let's analyze the effect on gold. You had a giant correction in 2008. You had another big correction there was a very significant correction around 2005, 2016, 2017. There was another big correction in 2000, 2001. So you've had big market corrections in the past, and guess what? First, gold goes down with everything. Everybody wants liquidity. Gold goes down, but then it bounces back.
Yeah,
Gold outperforms in a meltdown. Outperforms. It doesn't mean it's going to do really well, but it does better than everything else over sort of a 2-year period from the beginning of the meltdown. And we have lots of examples of that. people move to gold as a safe haven investment, as something that is a long-term store of value. It's been like that for 5,000 years. That's not going to change. For some reason, there's magic in gold. It's been a store of value, as I said.
Yeah.
That's not going to change. Whereas, all this other stuff, bonds, it's just paper. It's a promise by some company or some government to pay you back. It's not. There's nothing fundamental there. Uh, and some of these crazier fringe investments like Bitcoin, it's pure air. There's nothing to Bitcoin except faith. That's all it is. Electricity and faith. You lose electricity, you lose Bitcoin. Poof, gone. You lose faith and it disappears. That's all that props up the value of the cryptos is somebody saying, I think they're going to go up. There's a restricted supply. They buy them, the price goes up. It's basic supply demand. Supply is not changing, but demand could change very quickly. And then poof, there's no underlying value. Gold is different. Gold's got this long-term history. You could say gold's based on faith, but try giving $100 of Bitcoin to somebody and comparing that to giving them $100 worth of, say, a gold jewelry, a necklace or a ring or something like that they can hold and feel and touch. It's different.
Yeah, we really live in the wild times. I wonder what Yogi Bear would say on silver. Are the silver glorious days coming where we could see actually silver at $50 or something like that? And Ross, actually, what catalyst could trigger that kind of price action?
Yeah. Well, of course, with Pan American, I was in love with silver for many years. I mean, I started that company from nothing in 1994. Today, it's a very big company. I'm so proud of that. The management is fantastic. I'm retired now from Pan American, but of course, I still follow silver very, very much. And silver is more complicated because it's not just money, it's also industrial value. It has much more industrial uses than gold. It is used everywhere. It's probably the most widely used of all metals. Everything you can think of, it's just got extraordinary uses. And the big use today, from nothing 20 years ago, is for photovoltaic cells, for solar energy. A huge demand, and that's going to go up and up and up. So the demand side for silver is pretty good. If the economy is good. If the economy is poor, if it's weak, gold will outperform, silver will go down. If the market for precious metals is good, silver will go up. Silver is in the middle there. And so you have to say, why would it outperform gold? And I'll tell you why. If you have really strong industrial growth, along with good value for gold, you're going to see silver do better than gold. It could go back to 50. Who knows? It was $50 an ounce in 2008, I think, or something like that. 2008, or maybe it was 2011. I forget. Anyway, hit this fabulous price. So it's a much smaller market. It's about 1/10 the size of the gold market. So it's more volatile, but it has very strong fundamentals as well, just different ones than gold. You don't have central banks buying silver, for example. You have them buying gold. That means that the demand for silver for money is a very different type of demand. It tends to come actually from US and European retail buyers who want to have silver because it's cheaper than gold, and some people just love silver.
Yeah, but you made a great point. But do you see central banks changing their policies and maybe secure some silver in the vaults as well
No,
in the future?
no, I don't. No, I don't. And the reason is simple. Silver is about well, right now for what is it? I haven't actually looked at the numbers, but if you let me just see, 2,800 sorry.
Sure.
Let's see here. What is silver today? $30? 20,
Yeah,
25?
around.
Okay, I found this on the web. It's $30.
Theory, be quiet. Yeah, so it's 100. The silver gold ratio is favors gold right now, and
Yes.
that means normally if you follow ratios at all, you would buy silver. Silver is undervalued compared to gold, looking back 50 or even 100 years. But does that mean anything? Not really. It doesn't really mean anything. Every metal's different. But you could make an argument, and a lot of people do, that silver is highly undervalued, particularly when you look at gold. But again, silver has different demand sources. That's what's driving gold. Silver doesn't have those same demand sources. It's tiny metal compared to gold. It doesn't have the same liquidity. It doesn't have the same access to, or it doesn't have the same volume. You can move gold around very simply. Silver is much lighter, and so you need a lot more silver to equal the same amount of gold. You need, an order of magnitude more silver. So it's much harder to move around the world. So I don't. That's a long answer to a simple question. The
Sure.
answer is no. I don't see central banks buying gold.
Okay.
Buying silver.
Ross, can you give me an update on Equinox operations and plans, especially the Los Filos update? There was a public announcement of a signed agreement between the Mexican government and Equinox on this mine. Can you give us an update on that?
No, no, we haven't announced anything. The Mexicans announced it, and we are not announcing anything until we have more clarity on what's going on there. And there will be an announcement, fairly soon. But right now, there's some things that have to happen before that agreement is really ratified and made certain. And we're very, let's just say, conservative on what we say. We prefer it to be kind of like a done deal. In other words, it's kind of like an agreement to agree or a letter of intent. We'd prefer to make it something more binding.
Yeah,
But
for sure.
it's a good sign, and we're happy about it. This for your viewers is a deal that was done in Mexico in our Los Filos mine with the local communities. We've been working under community agreements that are very, you could say, uncommercial, and it's been very expensive for us and very difficult to operate. And we've had problems for 4 years, and we have to stop those problems. That mine's a beautiful mine. It has huge reserves and resources. We should be able to produce, 300,000, almost 300,000 ounces a year for the next 20 years there. But we need better agreements. And so we've been working with them. And this, we hope, is going to come to a positive conclusion, but we're not going to say anything until it really does.
Sure, fair
In the
enough.
meantime, Equinox Gold is having a very transformative change from being like a 500,000 ounce gold producer from 7 mines, in 4 in Brazil, 1 in Mexico, 1 in the United States, or 2 in the United States. From that size to we just opened an 8th mine in Ontario that is our flagship mine called Greenstone. So production should come fairly close to 1 million ounces a year, this year, next year, and that's a big transformation. And our costs should go down. So if you look at the strategy of Equinox, which is to build a big gold mine, pure gold mining company as quickly as possible, we began 7 years ago. And I would say we're close to that mission of sort of being a million ounce plus producer with a lot more growth behind that in several of our other projects. So it's a really happy story. With the gold momentum, the gold price momentum behind us, the winds are behind us right now very strongly. It's great. Production growth is going up extremely quickly. The gold price is going up. The revenues are going up. Our costs are coming down. That's a pretty happy picture. Of course, we have a lot of debt. And so we have to put all that free cash flow to repay debt. We're doing that right now. And I can see that continuing. So this is a really transformative period for Equinox Gold, moving from, a high cost, fairly large producer to a very very large producer at much lower cost, generating a lot of free cash flow.
Excellent.
And for investors, the whole point is to build something that gives investors superior leverage to gold.
Sure.
Not only in the reserves we have, but also in the production. That goes straight to our income statement. And so I would say that was our mission from the beginning, the same way as we had a very clean, simple mission with Pan American Silver. We achieved that. I would say we're very close to achieving that with Equinox Gold.
That's great to hear. What about Lumina? Could we see Equinox move on Lumina?
Yeah, I don't see Equinox. First of all, I have a difficulty because I have significant shareholdings in both, and I don't like conflicts of interest. So I can say that we're not looking at Lumina at all right now. But I use Lumina as an example of a very, very cheap development story. the cost of building a mine at the Lumina project in Ecuador is going to be around $1 billion. Could be a little more, it could be a little less, but it's going to be around $1 billion. The real number will come out in probably May this year when we finish the feasibility study. But it's not really something that fits Equinox at this time, but it should fit some other companies. So we are hoping it will be sold to some company that wants that big production, low cost, that they can put $1 billion into and build a really big mine. That's our goal there.
Okay, Ross, final question. On what other commodities are you currently bullish on? If you can name 3, 4.
Yeah, okay. I can start with copper. Copper, I really like copper. I've liked copper for a long time. I made a lot of money on copper in the 2000s, early 2010s. It's been very good for me, and I would say that bullishness is still there. It's not the same way it was when copper was $1 a pound. It's $4 a pound, and I don't have the same crazy bullishness of some economists and politicians about all these critical metals going to the moon, because there's a lot of copper around, and that's a very good thing. That means demand can go up and supply goes up, so the price doesn't go so high that it stops new mines and collapses the market. So copper's one. Uranium, I think, is pretty good right now. It's better than it was 10 years ago, for sure. It's good because the clean energy revolution is still with us, regardless of what Trump says. He's such a moron when it comes to science and climate change. Staggering, just staggering how you can have that level of willful ignorance in a time like this when so much science is behind it. It just staggers me how that gang that deny climate change is human cause. It's beyond my understanding how people can be so ignorant. That was an editorial, by the way. So uranium is good. It's clean. It's got a few problems like radioactivity and tailings, but it's clean, and so I support that. That'll help the uranium price. Beyond that, I'm not that positive about a bunch of things that other people are positive about. Lithium, I'm negative on. There's tons of lithium in the world. Again, lots of demand, yes. Lots of use, yes. But there's a lot of supply, and that affects the price. Cobalt, forget it. Cobalt is not enough in the world to support high density batteries that used to be Tesla batteries and that kind of battery in these good cars. But there's not enough cobalt in the world, so people are shifting away from cobalt. It used to be great 5 years ago, not anymore. Rare earth elements, yeah, there's a few. There's 13 rare earth elements, and some of them will do well, some of them won't do well. Depends where you are. But that's a very tough business, and there's not a lot of demand. It's very specialized. I don't know. It could bounce around a little bit. It's very hard for investors to play rare earth elements, though. Beyond that, iron's pretty well finished as a really strong metal. The steel market is overbuilt, and iron is not so great, I don't think. Coal, forget it. I've never been a great coal fan. It's dirty, it's polluting, it's bad stuff. If you make steel from coal, that's fine, but I mean that's okay coal. But again, the steel market is in decline. I think China has driven that market for years and years, and that party's kind of over, I think, generally speaking.
Yeah.
So yeah, those are some metals.
No, you named 5, 6, even 7, maybe. Yeah. Thank you for that. Sorry, this is my last question. I got this question from one of my followers. He asked me to ask you, who are the people from the investing and the commodities world that you respect the most? Or if you can name also 3 or 4, maybe.
Yeah, I really have to duck that question, Lucy, and I'm sorry. I don't know the players now. I'm an old guy. I don't invest in most companies. I know a few younger guys, a few people in the business, but I really can't give your listeners any real names of people I follow because I'm not an investor. I'm a developer. I've got very few things I'm working on now. I'm exiting more than I'm entering. I'm hardly investing anything in new companies, even though they're great. So I'm really sorry. I can't
No worries.
really tell you who's who. I mean, you talk to the guy who I respect as much as anybody in the whole industry is Rick Rule. You know Rick very well. He's very, very well known. Rick is just like a genius of understanding the business. He's had such a long term in it. He understands markets so well. He knows the players. He's investing every day. I mean, you could give him 100 stocks, and he could tell you the management, the properties, the stock price, the valuation,
Yes.
the direction, whether you like him. He's incredible. So, and he's super public. He does a new podcast every day, I think. So listen to some of Rick's and go from there.
Yeah, I did a couple of podcasts with Rick, and he
Did you?
respects you a lot.
Well, it's mutual. It's
yeah,
mutual.
yeah. Ross, I want to thank you for this interview. It was a great chat as I expected, and I hope I will host you sometime soon again.
Very good. Thank you for your interest and for what it's worth. I mean, it's just my opinion, and I've never let the facts get in the way of my opinion. So that's the other thing.